Welcome back, traders and investors. It's tax time, and we have Meisa Bonelli here. She's a Wall Street finance and tax professional, business matchmaker, and mentor. So it sounds like you have a busy day every day. How you doing?
I am doing fantastic, Joel. Thank you for having me on the show.
Thanks for coming on. Before we get into the tax questions, could you just give us a little bit of your educational background and also what you've done related to the financial markets?
Absolutely. So I was a pre-law legal studies undergrad major. I thought I was going to law school and was going to practice in mergers and acquisitions. And post-2007, obviously, the world changed, so I changed directions. In my corporate experience, I spent 12 years in private equity on the deal sourcing side of things and business development in the healthcare and real estate spaces. I also operate my own tax lien Indeed investing fund here in New York City, as well as helping out home-based business solopreneurs and startups with their taxes. So that's a little bit about myself.
Yeah, I got the dreaded meeting tomorrow afternoon, and spending the last couple of weeks trying to find out every deduction I can find under the sun. But when you get to that, I mean, there's some that are like, what are some of the are you serious crazy tax deductions that people go for? And I'm not sure if you deal with any specific ones for traders or whatever, but what are some of the ones that you would consider just pushing things a little bit too far?
Well, I've had clients ask me, Joel, about everything from Botox to birthday parties to can I write off, my mistress law school education. So those are some of the ones that people have asked me about. I'm like, absolutely, those are not going to fit. But the IRS has allowed, some tax deductions that will definitely raise some eyebrows. They've allowed sex toys. They've allowed swimming pools, air conditioning. As long as it's a justifiable expense, people will be surprised. But the IRS will allow anything. And with regard to traders, with so many traders having home offices and working from home, they should absolutely be taking advantage of the home office deduction. They should be taking advantage of any of the expenses related to them being a part of associations, mileage expenses if they're commuting with their clients. They should take advantage of everything that they possibly qualify for and sit down with their tax professional and turn over those rocks, as you sound like you've been doing over the last couple of days, and see what they're eligible to take advantage of.
Okay, and just leading into that, the biggest IRS audit triggers, kind of just following up on that.
Yes. Well, it's interesting. It used to be years ago we could tell our clients, well, this or that may trigger an audit, but just about anything can trigger an audit today. Becoming a new entrepreneur can trigger an audit, because if you're coming from a W-2 situation, you really don't have any business expenses. And in the following year, you've got $30,000, $50,000 in legitimate business expenses, that can trigger an audit. But even me personally, I've had a situation this year where I changed addresses here in New York, and that triggered an audit. And I had to call the tax department, because obviously they know me as a tax professional here in New York, and inquire about why. And it was because I had a change of address. So anything can trigger an IRS audit if it registers in the IRS system that there seems to be something that is different from years prior.
Is it the home, just coming from the chat room, is it like the home office one that, kind of shows up on the IRS radar?
Well, that has been a little bit of a myth that it used to be a real, but now it's more of a myth, because the IRS has simplified the home office deduction. And as of June of 2013, they now have something called the Simple Safe Harbor home office deduction, which will allow you to deduct up to 300 square feet for a home office. And the IRS will give you $5 per square foot, giving you a total of $1,500 to deduct. So they recognize that a lot of people were making gross errors on the home office deduction, and they created this very, very simple one. So we haven't had much time to see it in enactment, but when you use the home office deduction, the IRS would just like to see that you actually have a home office, and there are ways to document that.
Okay, all right. Now, let's say you're having a really good trading year, and you know that you're going to end up owing the government. You're not going to give back any of the profits. What's the best way to handle that? That be honest and just file the quarterly estimates, or what's the best way to handle that situation?
Absolutely, Joel. I would say that you should be very proactive about paying the IRS because depending on how the trader is set up, whether he's an independent trader or working with, a firm, there are strategies that you can put in place if you have an LLC, if you have a corporation, maybe you didn't do so well in a prior year and you can carry over those losses. So based on your year beginning tax strategy, I think that every person should just go ahead and pay the IRS after they've allocated everything that they can towards their business expenses. Pay them because those penalties and those interests is very high. It's burdensome. When they call you, you don't want to have to deal with them. You've got to pay your tax professional more to evaluate the situation. Maybe you have to get a new tax professional because yours doesn't specialize in IRS auditing. So, go ahead, be in integrity with the IRS and pay them if you've had a good year. Give them their piece of the pie.
I mean, is there like a threshold? I mean, if you're going to make 5,000 more, 10,000 more, or 50,000 more, I mean, is there a threshold there that people should be aware of?
When I sit down with my clients that are traders or some other type of solopreneur, I have them work out their threshold based on their retirement savings. So if they have which is a solo, self-employment pension, and they can put $52,000 away in that, and based on their business expenses and their living expenses and everything else that they've got going on, once they've got that retirement money completely stashed away, everything else is a tax strategy based on maybe what they want to spend the following year or what they spent in prior years if they don't have losses to see what they have to allocate towards the IRS.
Okay, Joshua P. said he still didn't take his home office deduction this year. Maybe a little bit wary of getting audited. I mean, is it something that he should consider? I mean, at least taking the standard deduction.
I would say to Josh that he should run the numbers to see if the standard deduction would even be worth it, depending on the size of his home office, because there's the room method for the home office deduction, and there's the square footage method, that actual square footage that you can take without taking simple safe harbor. So I would say to Josh, sit down with your tax professional and see if it's even worth it to file an amended return. And if it gives you a number that you're comfortable with, then go ahead and file the amended return with your tax professional.
Okay, one more from him. He has an S corp and an LLC in the insurance industry. Should he be using one of them to trade in, or not? Not mixing and matching.
Well, it depends on the objectives of the business. If he sets them up separately, then they have different business objectives, he should absolutely keep them separate. Because what I always tell prospective clients that come to me that are traders, is that each business entity and each trader within the business has to maintain the trader regulations to qualify for all of their business deductions anyway. So if it makes sense to keep them separate because of their different business objectives, absolutely keep them separate.
Okay. And any tax management tips for millennials? I'm sure we got a few of them listening into the show today.
Yes, absolutely. For millennials, I would say to them, if you're going to, before you file your taxes, you want to check with your parent situations. More and more now, we're seeing millennials, they work maybe full-time or even part-time jobs to put themselves through school, and they go and file their taxes because they know that they can file taxes. Somebody told them, and they file their tax return, and then it disrupts their financial aid. So I would say before you file your taxes, millennials, please inquire with your parents, because you could be a dependent student and you don't want that to disrupt your financial aid. Now, if you are an independent student or you have earned a good amount of money, and that's different for every student, and you go ahead and you file your taxes and you do get a refund, go ahead and start paying down that student loan debt. I know the thought is that, well, I'll start paying it when I get out of school. It's not due until 6 months after I graduate. No, start paying it now, because that debt tends to weigh you down. If it takes you a little while to acquire a job after you graduate, that debt is still going to be due 6 months after.
Okay. Very specific question here from DJ. What's the unrelated business taxable income UBTI in my IRA account that my brokerage firm pays the IRS on Form 990T?
Well, that is very specific, and I don't have the answer to that right off the top of my head, Joel, but I'd be willing to answer it in email format.
Okay, could you throw your email in there for in the chat? Are you into the chat or not?
I'm not in the chat, but I'll say it here on the line. It's Meisa, M as in Mary, E-I, S as in Sam, A. It's my first name, Meisa, at millennialtax.com. So that's MILLENNIAL tax.com.
Okay, and just to end the interview here, you have some tax saving strategies for home-based businesses. You have a few of those. You just want to go over those quickly for us.
Yes, absolutely. I believe that every solopreneur, home-based business, traditional business, you should definitely audit-proof your business. Look for ways to audit-proof your business, such as specifically for traders. Traders should have a calendar. I believe that every business should have a business calendar, but when you're in a business where the IRS really wants to see and drill down on your business activity, you should absolutely have a consistent business calendar. If you always keep it in Gmail, keep it in Gmail. But I personally keep a backup to the Gmail because it's an electronic calendar and the IRS understands that. So that's just one of the ways that I advise my clients to audit-proof their business is keeping a calendar. So you want to sit down with your tax professional throughout the year. Your situation may change. You could have a good second or third quarter, and that can totally change your situation. So you absolutely want to be in hard sync with your tax professional, and that's hard to do if you're only seeing them 1 year. Tax laws can change in between the years, and if they do, that means your personal situation changes. That means your business situation changes. So those are just a few that anyone can take advantage of, home-based businesses.
Okay, all right, and that's it for the tax saving strategies for home-based businesses.
Yes.
Okay, all right. Well, thank you very much for coming on. It's such a appropriate time in the year with taxes being due very soon here. And thanks for those tips. And we got your email in there, so you may be getting a few emails from our traders. So thank you very much, and have a good day. We'd like to have you on again soon.
Thank you so much. Likewise, Joe.